Good morning. My name is Vladimir Tikhomirov. I'm chief economist at BCS Global Markets, and I'll present you my view in the macro area for the coming week. Perhaps one event that I should mention is that during the past week we have upgraded, basically changed a few bits and pieces in our macro forecast for the year 2021 related to Russian economy. This forecast is based on a scenario where we see the world actually starting to get out of the pandemic sometime in second quarter next year, with a positive changes in the fight against COVID-19 happening sometime in second half next year. The reason for our midterm positive view is that, first of all, we expect the situation with the pandemic to start to improve with the approach of spring and summer. That normally happens. We have seen that happening in the northern hemisphere this year as well. So that should support change in the trend with the pandemic sometime from March onwards. The second reason is that we expect mass vaccination to kick off sometime in second quarter next year, and particularly the results being more and more seen in the second half next year. So based on this scenario, we expect to see positive changes in the global economy with the increase in services, trade, and finally with interstate communications and tourism. This would be a gradual process, but in statistical terms, the changes would be quite significant starting from second quarter next year. One of the reasons why that would happen, in our view, is the base factor effect. We don't expect global economy or Russian economy to show similar falls next year that we saw this year, particularly in the second quarter, which would mean that the annualized trend in the macro area would turn positive and would be sustainably positive starting from second quarter next year. Based on this scenario, we actually expect that in the next 2 to 3 months could be quite difficult still for Russian economy as well as global economy, because the pandemic is not likely to significantly come down because of the seasonality, because of the winter and the spread of flu. But starting from March, we expect these changes to happen. What that means for Russia is that after falling roughly by 3.8% this year, Russia's GDP is likely to turn to growth next year, posting an annual rise of about 3.3%. The growth trend would be uneven between the quarters, with the largest growth happening in we expect in the second quarter next year and perhaps third quarter, and then starting to gradually come down to more sustainable levels, roughly at around 3% or slightly below that year on year. On inflation, we actually have seen quite significant rise of inflation in Russia in November. The monthly data for November would be released by Rosstat this week, but we expect it to be around 4.3% year on year, which is higher than the current central bank rate and higher than central bank and government projections for the whole of this year. Inflation pressures are likely to continue to grow in the next couple of months, reaching roughly 4.5% by February next year. But from March, particularly second half of March next year, we expect inflation trend start to reverse and coming down to about 4% year on year by mid next year. Based on this scenario, we don't see any room for the central bank to cut rate in the coming months. The earliest possible cut could come in second half next year, again provided that the situation develops along the lines that we expect. Perhaps the most important change into our forecast was in the FX rate. We expected ruble previously to strengthen to roughly about 70 rubles to the dollar by the end of this year, based on scenario that crude oil prices would stabilize or even would be slightly above $45 per barrel levels. On the oil price forecast, we got it right, but the ruble has been consistently weak since mid this year. And the two reasons for this weakness, the way we see it, are one is related to fairly significant pickup in outflows of foreigners from local OFZ bond market. This was the reaction to the fact that the central bank has basically more or less finished with the monetary easing. And the second reason was related and is related to geopolitical situation. The change in U.S. administration with Biden coming over could mean that the U.S. pressures on Russia in the sanctions area could start to rise. And this is something that investors are taking with a quite significant bit of caution. And that translates in ruble being weaker than it perhaps should have been, given the rise in optimism, particularly over the last 2 to 3 weeks, and the slide in the US dollar rate against other currencies. Ruble has lagged quite significantly, and we expect this lag to continue. Based on our new scenario, we expect ruble to trade roughly at the same levels we see now, 76, 77 rubles to the dollar by the end of this year. But provided that we are right in anticipating that the global economy would return to growth next year and things will start to improve in the pandemic area, ruble has chances to strengthen roughly to 71 rubles to the dollar by the end of next year. So these are the main sort of outcomes or outtakes from our forecast. As to the current situation, we have seen a quite significant rally over the past 2 to 3 weeks on global markets. And this rally might take a breather over the next week or two. And potentially the two biggest drivers that would determine direction of the market moves in the next weeks would come from central banks. The European Central Bank, which meets on the 10th of December, and the Fed, that meets on the 15th of December, are expected to increase their support for economies. If that happens, markets can actually post another rise in December. If that's not the case, then we could see correction on the markets. Overall, we maintain a moderately positive view midterm for Russia and global economy, but short term we expect both the pandemic and economic situation to remain fairly difficult, both for Russia and the world. That's all on my side. Thank you.